good to have you join us today. Hello and welcome to Business Daily. I'm Jung in Seoul. We have a lot on our plate today, so let's get started by taking a look at today's highlights. It's a long-awaited dream come true. China's yuan gains global reserves status by winning the green light for the IMF currency basket. Korea's very first online-only banks are expected to launch soon, while brick-and-mortar operations look for ways to counter their rise. We sit down with an expert to talk about how these new banks will affect the country's overall banking system. But first, Korea's consumer price growth hit a one-year high in November. According to Statistics Korea, the nation's inflation gained 1% from the same period last year. The latest figures come as welcome news, as consumer price growth has remained rooted in the 0% range since December of last year, when it posted 0.8%. Core inflation, which doesn't take into account volatile oil and food prices, rose 2.4% from a year ago. The agency attributed the rise to a steadying of global oil prices, as well as gains in public utilities and transportation expenses. During its board meeting, the International Monetary Fund has given the green light to include China's currency, the yuan, in its basket of reserve currencies. Now, joining this exclusive club might mean a big win for China. But what does it mean for Korea? Our Hwang Jie has this report.
Starting in October of next year, the Chinese yuan will become one of the world's elite currencies. The IMF on Monday added the yuan to its basket of reserve currencies, a designation known as the Special Drawing Rights, or SDR.
The addition and the inclusion of the renminbi in the SDR basket of currencies is a recognition of the significant reforms which have been conducted, of the significant opening up of the Chinese economy, of the financial, more market-driven principles that are being used by the Chinese authorities going forward.
The IMF uses the reserve basket when providing emergency loans for countries like Greece, and only 4 currencies, the US dollar, the euro, the Japanese yen, and the pound, are included in the group.
This is a great step toward making the RMB truly international and encouraging individuals and organizations of all countries in the world to hold it as well as invest it.
And the inclusion brings Korea a step closer to its goal of emerging as an international hub for offshore yuan transactions, as the country marks the one-year anniversary of its direct trading market with the Chinese currency. For the past year, the amount of average daily transactions of won-yuan direct trading stood at around $2.2 billion, and that matches over a quarter of the amount in won-dollar daily transactions. Korea's financial authorities aim to further boost the market with a set of new measures.
The market currently uses a market average for the won to dollar exchange and the cross rate for the yuan and dollar. But from next year, it will adopt a direct quote between the won and yuan.
While the yuan's new status is expected to have a limited impact on the overall Korean economy in the short term, experts predict that it will ease risks stemming from possible global currency shocks as it diversifies currencies used in trade settlements. They add, though, it will also further raise Korea's dependence on China, an outcome that could have both negative and positive effects. Hwang Jie, Business Daily.
We'll be seeing the nation's first internet-only banks next year, the first of their kind in Korea's 23 years of financial history. Now, how will the upcoming launch affect the country's overall banking sector? Let's find out.
The consortiums for K-Bank and Kakao Bank have won preliminary approval to launch the nation's first internet-only banks. If finalized, these would be the first licenses given out by the Korean government for the establishment of a new bank in more than 2 decades, since Peace Bank received the green light back in 1992.
Until we get final approval, we're going to prepare to provide differentiated services that consolidate ICT and finance.
Through these internet-only banks, which are expected to start operations next year, the government hopes to open up the financial services sector even more. Kakao and K-Bank, meanwhile, are pinning high hopes on loans with mid-range interest rates that will appeal to small borrowers, saying they'll be able to better evaluate borrowers' credit based on data they collect from mobile devices. So will these internet-only banks help generate innovative services while encouraging well-intentioned competition?
And to tell us more about this, Professor Yang Jun-seok from the Catholic University of Korea joins us in the studio today. So good to see you, Professor.
Happy to be here.
So Kakao Bank and K-Bank are the ones chosen to run Korea's very first internet-only banks. But for those of us who don't know much about this concept, can you tell us how these banks differ from the brick-and-mortar banks?
Okay, well, from the customer's point of view, the only difference would be because these banks have no branches, they have no people working in those branches, you have to do all your transactions using your computer or your smartphone. Every transaction should go through the internet rather than going through the branches. So that's going to be the big difference. For people who don't usually go to bank branches personally, they shouldn't see that much of a difference. But on the other hand, if you're the kind of person who likes to go to banks, then you will have no branches to visit.
But then the U.S. launched its first internet-only bank back in the 1990s, and China opened its first one 2 years ago. Then why does Korea, it's been relatively behind in terms of opening its first internet-only bank. So why so? And also, how does Korea's internet-only banks compare to ones overseas?
Okay, well, we tried twice, actually, 2005 and 2008. Both times it didn't catch on. Partially it was because of lack of publicity, lack of people's general knowledge about internet banks. Partially it was due to regulations. We were very nervous about checking somebody physically, whether that person actually exists or not. So they're really very difficult to get rid of a lot of these forms. And this is the first time that we've actually managed to get rid of a lot of those regulations. So no one's completely sure if all the regulations have been gotten rid of yet. But we have tried. And this will be our third attempt. Hopefully it'll catch on. If we compare it to, say, other countries like the United States or Japan, well, the United States in the early 2000s, they started out with something like 30 internet banks. Now only about 14 of them still remain. And that's out of something like 5,500 banks in the United States. So they only account for something like 3% of the total assets of the banking, commercial bank industry. So they've taken a bit of a niche market rather than becoming a major competitor. Japan, sort of similar. There's 6 internet banks out of 198 banks in total, but they seem to be doing at least somewhat better. They seem to be continually profitable. So there is a role for internet banks, but how big a role? Well, based on the experience with the larger countries, perhaps not too large.
Okay, then how much impact do you think their debut will have on major commercial banks, and how are these banks preparing for their debut?
Okay, well, commercial banks, a lot of people do most of their transactions by computer already. So some people have been questioning what additional value added can the internet banks bring. If they cannot find some other value added, then internet banks really cannot compete with other banks. One of the things that are often mentioned is that internet banks will have better risk assessment models using so-called big data and other data sets, but there's no reason why commercial banks cannot introduce it as well. So hopefully this will be an opportunity for everybody to improve their risk assessment models, which will be good for the Korean banks.
Come to think of it, for the past decades, Korean banks have been kind of competing within the boundaries that the Korean government has set, resulting in limited profitability. So what are some problems that we are seeing in Korea's financial businesses, including banks, right now?
Okay, well, if we only look at commercial banks, remember what I said earlier, the United States has 5,500 banks, Japan has 198 banks, Korea has 18 commercial banks. 18. And then only 4 of them have really big national networks, so they take most of the banking business for the country. And that is very oligopolistic, and that reduced competition. So Korea is typically ranked very low in terms of competitiveness, in terms of profitability. I think we were rated something like 83 out of 94 countries in terms of profitability of the banks.
Oh, wow.
So we need better risk assessment models, we need better customer relations models, and hopefully this internet banks will bring those type of factors back in. But the real problem is going to be who the internet banks are going to be competing with. The commercial banks right now, especially the four major ones, are so big that I'm not sure if the internet banks will be big enough to actually compete with those four large banks. So their actual competitors may be savings banks. Now, strange thing is savings banks are not really considered legally banks in Korea, but still, there's something like 80 savings banks. A lot of them are small, a lot of them are regional in nature, and a lot of them charge very high interest rates, like 30%. But also, some of them are in a very bad financial shape. So every now and then, there's some regional financial crisis when some of these savings banks get into trouble. And if the internet bank are more efficient than them and they take on savings bank as competitors, that might create some hardships in the savings bank sector, which the government then will have to take care of.
Well, going from that, some experts have even said that these Korea's first internet-only banks are going to be a big bang, a financial big bang. It could actually spark one. Do you agree with that?
I wouldn't go that far yet. We don't know how big the internet banks will be. As we've seen before, a lot of internet banks go out of business very quickly because they don't succeed. We saw that in the United States. The size of these banks are probably not going to be large enough to actually compete with the four major banks. I hope that they spur the four largest banks to get better risk assessment models, better customer relation models. I hope they spark the savings banks to become more competitive and more solid. So hopefully they can serve as a good trigger. But the interesting thing is these two internet banks are the first new commercial banks to be established in Korea in 23 years. Wow. The last new bank that was established in Korea was Peace Bank, and it didn't do very well, so it got absorbed into Uri Bank group. Hopefully this will start a trend where we actually have new competitors in the banking market who can offer real competition to existing players.
Well, these banks are actually set to open next year. So in order for them to successfully settle, what hurdles do you think they still need to overcome?
Okay, well, they don't have physical branches, and a lot of people who have money actually like seeing people. So that's going to be one hurdle that they have to get over. Also, we believe that we got rid of most of the regulations which hindered internet banks before, but there might be some few lurking around. So it'll also depend on how quickly that we can get rid of some of those boundaries, or rather the difficulties that remain. And then a third problem is that, the Kakao Bank and K banks are actually a consortium. And they actually include players from the four largest banks as four largest banks themselves or their subsidiaries. So we don't know whether they'll actually be able to compete with the four largest players when they also have a finger in this pie. So those will be type of hurdles that we will have to see whether internet banks can get over.
Thank you so much for your insight today, Professor.
Thank you.
Now that Korea's National Assembly has approved the free trade deal with China, Korean businesses are pinning high hopes on benefits they will get from tariff cuts starting next year. But some are concerned that the FTA might do them more harm than good. Our Kim Min-ji tells us more.
Over the next 10 years, the Korea-China FTA is expected to boost Korea's real GDP by almost 1% and create over 53,000 new jobs.
The government will work closely with China and modify related rules for the trade deal to take effect this year. If this happens, tariffs will immediately be cut the day it takes effect and again on January 1st.
Under the deal, Seoul will eliminate import tariffs on 79% of all products from China within a decade, while Beijing will do the same on 71% of all products from Korea. In 20 years, duties will be removed on over 90% of all goods. That translates to over $5 billion less in tariffs paid by exporters every year. Korea's free trade agreement with its largest trading partner, China, is expected to provide new momentum for local exports that have fallen every month this year. The FTA is expected to boost annual bilateral trade between the countries to more than $300 billion, up nearly 40% from 2012. In addition, the deal will give Korea price competitiveness over rivals in China's huge consumer market.
Korea's early advancement to the Chinese market earlier than our competitors, such as Australia, United States, and other countries, is critical for Korea's long-term success in the Chinese market.
Like many other trade deals, the agriculture sector has been a sticking point. But experts say the level of liberalization for the agro-fishery sector is lower compared to Korea's other FTAs.
Korea was able to protect highly sensitive products, including rice. There's going to be damage to some sectors, but we can't say it's entirely because of the FTA.
The government says the further opening of China could actually give Korea's agriculture sector more opportunity to make inroads into the Chinese market. Kim Min-ji, Business Daily.
And that brings us to the end. But we'll be back tomorrow at the same time, same place for your Business Daily. So don't forget to check back with us then. Thanks so much for watching, and bye-bye for now.